Hello traders! In this video, we will have a look at the multiple time frame analysis that will help you to stay ahead of the game. One of the biggest mistakes traders do is to wake up in the morning and rush to trade the markets. Preparation for the upcoming trading week and day is crucial, as you are able to develop a plan that will guide you through all the possibilities that can happen. There are no two traders who trade 100% same. So it is up to you to decide what type of trading you want to do. Do you want to use only price action? Or add some technical indicators? Or focus solely on the fundamentals? There is no right or wrong in trading. So don't think there is one ultimate way to trade and other approaches don't work. For this video, we will give you an example of a simple trading strategy that evolves around trading horizontal support and resistance levels and give you a complete breakdown through 3 time frames for a mix of intraday and intra-week trading, which is something most traders focus on. Weekly chart. Since the majority of traders specialize in intraday and intra-week trading, we are not going to a higher time frames than weekly. Of course, monthly, quarterly, or yearly charts can uncover some macro directional details. But for intra-week and intraday trading, you don't need to pay too much attention to them. When looking at the weekly chart, we should always ask ourselves questions such as: where is the market going? What has been the general direction of the last few weeks? What happened last week? Was the market trending or ranging? As you can see from the chart, the weekly time frame functions as our broad navigation. Before drawing any lines to the chart, we should just take a look at the price movement alone. After this observation, we can notice that GBP/USD broke out from the 2-month-long trading range at the end of July. The price was ranging during the past 2 weeks, and this signaled that some bigger move might be coming soon. After this, we can draw support and resistance lines using price action. When marking out your weekly chart, there is no reason to go thousands of pips above and below the market price, as there is a very little chance the price is going to reach there during the following week. As you can notice, we use purple color to mark out our weekly levels. We simply mark out support and resistance levels from right to left. Daily chart. Looking at the daily chart gives us a more detailed look at the actions of previous days. We are going to examine the past trading week and ask questions such as: what was the direction last week? Was the market in range or trending? Should I look for a trend continuation or a mean reversion? Is the market overextended? If I could only use a daily chart for trading, which direction would I say the market will go? What are the macroeconomic events planned for the next week? And what time and day they are released? Responding to these questions, we can mark out our chart with lines. As you see, we marked out daily levels with the blue line. Once again, we mark out the most recent levels, where the price bounced from. We also boxed out the recent trading range with shaded gray color. For reference, we also shaded the areas from the past with a similar price behavior. As you can notice from the past example, every time GBP/USD was in a very tight range like this one, we had a big expansion shortly after. This gives us a clue that we can expect more of a trending movement. Execution chart. This is completely up to you. Some traders like to enter their trades on H4, H2, H1, or whatever time frame is suitable. For this example, we use H1 time frame for marking out levels and also entering and exiting potential trades. Our intraday execution chart should be revisited not only during the weekend, but also in the morning before we start trading. These levels change pretty often, so there might be a need to adjust them accordingly. We marked out our hourly levels in orange. We also added arrows for better visualization of possible movements. This is not necessary, but it can help especially if you are in the learning stage. We also added 2 possible scenarios for trades to unfold, one for a short trade and one for long. With this being marked out, we are ready to tackle the market. Be mindful of your levels and macroeconomic releases coming into the new trading day. Of course, you can use indicators or anything else to mark out your levels. It is completely up to you. The main takeaway from this video is to understand the bigger picture of the market, what it's trying to do, and where it's trying to go, and more importantly, being prepared for every piece of movement. Alright traders, this is it for this video. I hope you have enjoyed this video, and if you have any question, or you are just struggling with something, or you are interested in something, just let your comment down below. Please don't forget to subscribe our YouTube channel, and I wish you steady study and see you next time.